On the call this morning, I'm fortunate to have my guest is Jay Connor. Jay Connor is a real estate developer. He's a national speaker, a private lending expert, and also in business development. He's been buying houses for over 14 years, and he's rehabbed over 300 houses. He's been involved in over $52 million in transactions, and for the past 7 years, Jay has completely automated his seven-figure income business. He's raised over $2,150,000. He did that in just 90 days with private money. And he's, like I said, he's a national speaker. He's also the author of the New Masters of Real Estate, Getting Deals Done in the New Economy. Jay, how you doing?
Good morning, Darren. Doing fantastic. Thank you so much for having me on the show, Commercial Real Estate Pro. And wow, it's a little earlier in California, I think, than out here in North Carolina.
Yeah. We're saying cock-a-doodle-doo, but it's all good. The sun's up, so time to get on with it. But thank you for doing this today. Jay, I gave a little bit of an introduction there about some of your accomplishments. If you could do myself and the listeners a favor and tell us a little bit more about your background and how you got going in real estate.
Sure. Well, I was born and raised here in eastern North Carolina, small town, Morehead City, North Carolina. And I actually grew up in the mobile home business, manufactured housing business. My dad actually, back in the 80s, ended up having the largest retailing company of manufactured homes. And the retail financing was cut off from that industry about 14 years ago. I knew in the back of my mind, if I ever got out of manufactured housing, I wanted to get into buying and selling single family houses and also doing commercial projects. And so the reason I wanted to get into that is because my wife, Carol Joy, and I have really, really good friends in New Bern, North Carolina, about 30 minutes away. And some years ago, back in the early 90s, they wanted to build their house. They didn't have a down payment. So Craig's father-in-law down in Florida had been a real estate flipper for years. He said, I'll tell you what, guys, I'll come up there to North Carolina, find a fixer-upper, I'll buy it. You do the sweat equity on the weekends, and you keep the profit for your down payment on your house. So that's what they did. In less than 90 days, they profited almost $30,000. And that stuck in my brain. I said, you know what, Jay Connor, if you ever get out of mobile homes where I was struggling to make $2,000 on a single wide, I'm going to start flipping houses. So we were shutting down the manufactured housing company. And again, this was 14 years ago when I started. I said, I tell you what, I'm going to look. And I read some books, but I wasn't very smart. I didn't get a mentor up front. So I read some books on this flipping thing. And I said, well, what are you supposed to do? So I found the Homes magazine, and I looked for the nastiest foreclosure, nastiest smelling house I could find. And my dad and my wife tell me I found it. So I went and found over 60-some people had looked at it with no offers. This was 14 years ago when you could fog a mirror and get a line of credit. So I got a line of credit at the local bank, unsecured. Can't do that much today, hence our topic. So I went and bought it for $50,000. I put $50,000 in it, and in 60 days we flipped that baby and pocketed $40,000. I said, I like this business. So I did 3 houses from start to finish my first year. And then the following year, I got into commercial and developed a shopping center, only about 10 minutes from where Carol Joy and I live here. So anyway, fast forward to just 8 years ago, I called up my banker, and there was this dead silence on the phone. I had 2 houses under contract, ready to close on. And I was funding all my deals, Darren, up until 8 years ago with lines of credit at the bank. And I got cut off with no notice. And so that's how I got introduced to this wonderful world of private money and funding, since we haven't missed a deal because of not having funding. So in answer to your question, and that was a little long answer, but I got interested. I've been in the housing business, and my father did commercial as well. But really ramping it up by getting the funding in place is really what's made all the difference in the world.
Gotcha. So when you were doing your flips before the phone call to your banker, were you basically using just the unsecured lines of credit? Was that what you had access to buy and fund your
Yeah.
rehabs?
Yeah, I started out with the unsecured lines of credit, and then once they saw I was pretty good at what I was doing on the single family houses, then they increased my lines. But then, of course, they would start collateralizing each loan with the
Right.
property. So I still had an unsecured line, but then they just started using the properties as the collateral, and they grew that to $1 million. Of course, you're out there in Oregon,
Right.
not too far from California and all that, and Washington and everything. So, I know out there $1 million will barely buy you an outhouse,
Right.
but here,
Right.
here in North Carolina, 14 years ago, I could do about 4 houses with that at a time in Sherman.
Right. Right. So I appreciate you sharing your background there, because I think it's always fascinating how everybody gets to where they are, especially in real estate, because I think there's so many opportunities for success and failure. And the people that I've met in this business that have been in it for any length of time, I've seen both sides, and
Right.
the ones that have stayed in it longer have probably come out better more often when the chips are down, kind of thing.
Oh,
And
absolutely. If I had not have had that experience, really, of being cut off from the well, actually, if I stop and think about it and look back, if the retail financing hadn't been pulled from the manufactured housing business, I'd still be in that. I
right,
wouldn't be doing like one of my big dreams today. And if I hadn't have been cut off from the banks with no notice of using my lines of credit, I wouldn't have all this private money funding that I've got now. If it hadn't been for the private money funding, I wouldn't be traveling the nation now, doing about 35 events a year with my wife, training, inspiring, and motivating other real estate investors or wannabe real estate investors how to get into the business and how to get their funding. So each progression was germinated through some type of adversity. You're right.
right, right. So let me ask you, when you say private money, can you describe a little bit about what is private money? Is this a rich relative? Is this strangers, or what are we talking about?
Yeah, it's all the above. Private money, and if someone's been in real estate investing for any length of time, then they're going to know what I mean when we say hard money.
Right,
Okay. And so let me distinguish between, of course, hard money is not going to a traditional bank. Private money is not going to a traditional bank. But if time permits, we can dive for a moment or two into what's the difference. But first, what's private money? Private money is simply an individual or private lending. A private lender is simply an individual, just like you, just like me, that loans out their investment capital or their retirement money, which is a whole other category, to us. And so we're not talking banks, we're not talking institutions, we're not talking brokers. We're talking actually going to individuals that are looking for a higher rate of return on their investment capital or their retirement funds, and to get an investment opportunity that is safe and secure. And of course, we provide that. We don't borrow any unsecured funds. But in answer to the question, a private lender is an individual, not an institution.
gotcha, gotcha. Um, when you're looking for private money, um, I'm just trying to think, who do you where, let's start with who is somebody that has private money. I mean, you talked about it can be an individual, but if I'm thinking about the guy at work that is working the same job I am, that's probably not the guy that's got the money.
Right,
Um,
right.
who how are you finding these individuals that have uh, money to lend?
Where's the money?
Right.
I'm actually coming out with a new book later this year. I don't have it ready for release, and if I did, I would offer it on your show today. So instead, I've got my current book. But the book I have coming out is titled "Where to Get the Money," and that book is actually based off of a 90-minute talk that I do across the nation on other real estate investor stages and et cetera. So the money comes from two primary categories as far as private lenders go. It comes from, number one, what we call the warm market. And the warm market is what we refer to as people that we have some kind of relationship with. I mean, it could be family, it could be friends, it could be, and I've got, when I teach my students, I've got this exercise I have them go through called the Magic 44 Grid. So there's at least 44 categories of people that are potential private lenders for you. So people that you have some kind of relationship with. The other category are existing private lenders. And the question is, okay, how do you find those people? Well, a great place to find existing private lenders, and these are not hard money lenders, these are individuals just like you and me and our listeners and viewers here on the show. There are companies that are called self-directed IRA companies. They are IRS approved third-party custodians that allow us today to move or transfer our retirement money, or our private lenders remove their retirement money into a self-directed IRA. And so there's 5 major ones in the nation. And so you can go as a real estate investor that wants to be a borrower to these networking events. And you've got hundreds and hundreds of people that have got retirement funds looking for places to loan their money out. And here's what's beautiful about self-directed IRAs. That is, they can loan it out tax-free, penalty-free, and no limit to their income per year. So there's networking events. Now, when I started out raising private money, coming up on a little over 8 years ago, I did it in what we call the existing private lender market. I did it the hard way. I hired my attorney's paralegal to search public records. I mean, think about this, my lands. To search public records in my local area here, looking at every deed of trust, it's a deed of trust state we're in, looking at every mortgage, looking for individual names on deeds of trust for money that they had loaned out, not sell or carry back, not loaning money on their house that they lived in, but actually loaning money to other individuals. And then I created these 2 direct mail letters that I'd mail out to them. And I wasn't openly soliciting. I was just establishing a relationship. And then I would ask them, what kind of rates are you accustomed to getting? Thank goodness we got a whole lot better way today. I've got my own private lender data feed. I get over 12,000 private lenders coming into my data feed every month from public record all across the nation.
Wow. So back up, you had your assistant was actually scrubbing the public records for titles and looking for when there was an individual as the lender, and that was how you guys were creating your database, huh?
Yes.
Wow, that's a lot of work.
One at a time.
Yeah. Well,
so now today we just type in the zip code,
right?
How many miles you want to search around the zip code, and boom, there it is. It's still all coming from public records. And in my data feed, I've already got the letters loaded. And so all you do is push buttons and boom, there they are.
Got it. Well, it's funny, though, sometimes when you look at things like that, the actual work that it used to take to do it. And I'm assuming a lot of times your data list was more accurate than sometimes what you find sometimes. I mean, because you actually did the work and found the people and built the list as opposed to sometimes when you buy a list kind of thing. But that's
And I want to caution your listeners and viewers here on the podcast. There are companies out there that offer private lender list,
right.
and all I can just say is just be wary. I've subscribed to those lists myself. I mean, I'm known as the private money authority, so I want to know what's going on. And and I don't badmouth anybody. I mean, let people find out on their own. But there's one company out there I checked out 6 months ago that my lands. I downloaded the list and I called 10 phone numbers and 9 of them were disconnected, and one of them was a sales flower in Utah that didn't know what I was talking about. So anyway, just deal with somebody that knows what they're doing and is reputable. Is all I know to say.
Yeah. No, I think anybody's bought A-list will attest to your experience there. So that's good. So, when you found the private money, what are the advantages to using private money as opposed to going to your traditional lender?
Oh my word! Whew! I tell you what. To this day, I still thank my banker for cutting me off because, because of, and I tell you what, I probably shouldn't say this, but I'm going to anyway. About 5 years after I got cut off from my banker, and see, I learned about this private money thing 2 weeks after I was cut off. And then within 90 days, got over $2 million. So he did me this favor. I went from $1 million line of credit to $2.5 million. Today, Carol Joy and I have got 44 private lenders with over $5 million that we continue to, use from house to house to house. But the first reason I was getting ready to tell you. So 5 years after I got cut off, that same banker, he didn't cut me off. The bank cut me off.
Right. Right.
Him. I mean, and of course, we know what was going on 8 years ago in this global economy. I mean, the spigot cut off, overnight,
Right.
And so he calls me up 5 years later. He says, Jay, I got great news. We're loaning money again.
Yeah.
Real estate investors. I said, great. I don't need you. But anyway, so what are the benefits? Number one, you got the warm market, you got existing private lenders. The biggest benefit is we make the rules.
Oh.
We determine what interest rate we're going to pay.
Right.
We determine the term. We determine who we want to do business with. We determine, as I said, the interest rate. So I teach my students across the nation, know your program. Okay, if you don't know your program, just duplicate, my program. So the first benefit is you're in so much more control. All right. Another big benefit, big. This has got nothing to do with hard money. All right. So let's define real quick, if I may, Darren. Is that okay?
Yeah. No, absolutely.
So real quick, let's define hard money versus private money. So hard money is actually private money that's being brokered by a licensed broker, and so it's a middle person. Hard money is just a middle person or middle company that's gone out and found private lenders, just like I show my students how to get the private money, and it's for commercial and it's for single family. And so we're bypassing the brokerage and just going directly to the sources of the money. So what are the advantages? Well, for one, if you're borrowing hard money, national average right now, you're only going to get advanced 80% of the purchase price, single family or commercial, regardless of how good the deal is. In the world of private money, we're going to get 100% of the purchase price. And in single family houses, we'll get up to 125% up front, which takes care of the rehab. So as a result, in this world of private money, we don't have to bring any money to the closing table. I get a big check every time I buy a single family house with no money out of my pocket. I mean, I walk away just about at every closing with $25,000 or $30,000. You say, wait a minute, how in the world is the private lender protected? Private lender's protected because I'm buying these houses at 30 to 40% of the after repaired value. So as a result, I'm not borrowing more than 65% of the after repaired value. So even if I lost my mind and went to the Caribbean, then the private lender is still protected because of the low loan to value ratio of the after repaired value. And the only reason those dollars work or the math works, is because I'm buying the houses and properties at 30 to 40 cents of the after repaired value. So back to the question, what's the benefits? Get money up front. Don't have to bring any money to the closing table. Versus, having to bring money to the closing table. Hard money, average term is only 6 months. It's real short-term money. Average term is only 6 months, maybe 12 months from some hard money lenders. And by the way, I'm not poo-pooing hard money lenders. I mean,
Right.
God forbid you ain't got any private money. But if you ain't got any private money, number one, start listening to me. Sorry for the shameless bribe. But secondly, have a relationship with all the funding you can get. Another benefit is on my lands, the interest rate. Private money, national average is 8% right now. You say, whoa, that sounds high. No, it isn't compared to 14% hard money, 4% origination fees. There's no origination fees at all in the world of private money. And then you got extension of term. So if you don't have the property cashed out in 6 months or 12 months, will the hard money lender extend the term? Sure.
Right.
But what do they want? More money.
Right.
So the bottom line on the hard money comparison or contrast to private money is first year is an average of 20%, private money 8%. Another really big one. I mean, the benefits are just so long. Close quickly. Holy mercy. Close quickly. All of our offers to single family that are for sale by owners are actually in the multiple listing service. And all our offers we can close in 7 days.
Wow.
7 days. You know, from a traditional lender or a hard money lender, I'm surprised anything ever closes. I mean, what do they do with the 4 W-2s that you send in? I don't know.
Right.
But
Right.
private money close quickly. So you make the rules. You don't have to bring any money to the closing table. It puts you so much more in control. And here's another big one. On my lands, no credit check. No credit check. Your credit has got absolutely nothing to do with how much private funding you can get because all the loans are collateral based. I could go on, but those are the main benefits.
No, I think you hit on a bunch of them. That's all good. I'm curious. I think what I'd like to hear a little bit more about is you mentioned obviously in the single family business, I think it makes complete sense. And I'm assuming based on the values that you've experienced there, it's easier to get one lending source for the full amount. But what about in commercial when you're getting into larger values and that? Is there any different strategy, or is it just finding lenders that have more to lend, or can you speak to that?
Yeah. Yeah, sure. So excellent question, by the way. So what's the difference on needing, how do you get more money? So the first answer is, depends on how big the project is. So let's, like when we first got to know each other, Darren, we're talking about, okay, what is the definition of commercial?
Right, right.
So we can be talking about, if we're talking about small apartments, that can be duplexes, triplexes, quadplexes, or small apartment, complexes. On those types of projects, it works the same way as investing in single family houses, except the following. You either have a private lender that's got more funds to work with. For example, in my private lender data feed, most of those private lenders max out at about $800,000. So on the West Coast, you're not going to get an apartment complex of any size or a quadplex, probably for that money. You're on the East Coast, Texas, mid-U.S., sure, that works. So you're either going to get a private lender that's got that to work with for the small commercial, or you're going to have multiple, now listen carefully, multiple private lenders, and you can do this just even on a single family house, multiple private lenders secured or collateralized by the same property, but watch this. The total, so obviously you're going to have a private lender, only one private lender in first position.
Right.
Which is going to receive most of the security. They're in first position. You can have on a single family house or small commercial, you can have multiple private lenders on this collateralized by the same property, but with this in mind, with this condition. We talk about total loan to value, not just loan to value, but total loan to value. So total loan to value is adding up, okay, how much is the private lender in first position, second position, third position, fourth position, add all those up, divide by the value of the property, the project, and we never want to exceed that in single family or small commercial. 75% of the total value of the project. Now, you go on up to bigger projects, and come back to me, Darren, and make me clarify if I was confused, if I was not clear on something. And one thing I do want to say before I go to the larger projects, you must disclose to any lenders that are in a junior position. Must be disclosed on the note. Okay. Some private lenders won't be in a junior position.
Right.
They won't do it. They won't do it. You know, a lot of them will, as long as that total loan to value does not exceed the 75%. I was going to talk about bigger projects, but you might want me to hang on.
No, I was going to ask you real quick. So, as far as a reason for a lender to agree to be in a junior position, is there any kind of incentive? Is there a higher rate for what their risk? Is that okay?
Yeah. So on single family, first position today is 8%.
Okay.
8% in first position. Second position or any junior position on a single family house is 10%. Okay, 10%. And quite frankly, if the money was coming from what we call the warm market, we could do 8%, but I just think it's the right thing to do, you know.
Sure.
Now, when you come over to commercial, the interest rates are a little different. Commercial rates are lower than single family. They have to be. Now, so let's talk for a moment, if we can, about how in the world are you using private money on commercial for the long term? Well, you're really not.
Right.
Okay. The deal is you want the private money to get the project off the ground and going. The goal is to get that commercial project what we call seasoned. Okay. And of course, with your listeners being involved in commercial, we know what seasoned means. You know, the property. Like let's say that we're wanting to invest into a mid-size apartment complex.
Right.
Okay, let's say it's got 30 doors or whatever, right? And let's say that it needs to be renovated and rehabbed. So your traditional lender's not going to give a loan on that.
Right.
So we use private money, okay? We use the private money to buy the project, to advance the money on the rehab or renovation of that apartment complex. And now we want that project to be seasoned. We want it to be cash flowing. We want it to be occupied at least 80 to 90% or more. And you hold it there for 2 or 3 years. Now you let the project stand on its own and refinance itself through a traditional lender. So we may start out paying 6% today on private money, but we want to move that down to 4.5%, 5%, you know, as of today's show, you know.
Right. No, that makes sense. And you answered a question I was hoping to ask was about the length of term on private money. Is it typically, do you find 12 to 24 months kind of the window on, or what's an average term on a private money loan?
On single family, it is 2 years to 5 years. You know, hard money that we talked about is like that 6 month to 12-month thing.
Right.
But on private money, it's typically 2 years if the money is coming out of investment capital. And we'll go ahead and write the notes at 5 years if the money is coming from retirement account, because the term is not that important to a private lender using retirement money, because the money that's coming back to them, by the way, we don't pay principal and interest. We don't pay principal and interest. We pay interest-only payments, and that's a win-win. The private lender makes more money because all of their money stays invested until the property cashes out or it refinances, and it helps our cash flow. So, yeah, 5 years of it's coming from retirement funds.
Interesting. So you said the interest only. Is that a standard in private money lending?
Yeah. Well, if you're going over to hard money, which is not true private money, as we've already determined, that may be principal and interest, that may be interest only. In the world of private money, interest only is the standard. Again, helps the cash flow on the borrower, but primarily the lender. And I'm a private lender myself, by the way. I mean, I loan out money from my retirement account, my self-directed IRA, to other real estate investors. I like the passive income part of the business. Do nothing, make high rates of return safely and securely.
Right.
But yeah, the interest-only payments on a win-win basis is the standard in private money.
Got it. I want to ask you, so when you're approaching a private lender, what is the dialogue? What's the conversation with somebody that you're trying to qualify and find out what the availability of their situation?
Yeah. Well, it depends. It depends on if you are talking to someone in what we call your warm market. There's an established relationship some kind of way, or you're talking to an existing private lender. The conversations are a little different. So let me share a conversation I had with you. In essence, Carol Joy and I were out to dinner last night, right here to a restaurant in Morehead City. And by the way, my favorite book I've ever read as far as mindset goes was Og Mandino's University of Success, that I started reading back in when I was 24 years old. And I'll never forget, it was either lesson 9 or lesson 10, talked about, it was called Acres of Diamonds. And Acres of Diamonds talked about how what you're looking for in life a lot of times is just like right under your nose. And so, what do I say to a potential private lender? So last night we're out to dinner, and we're getting ready to, pay the bill or whatever. And there's a table nearby that says, hello, waves their hand. Well, I recognized one couple. I didn't recognize the other couple. So we went over to say hello. Come to find out, in this conversation, this gentleman and his wife live right here in our subdivision in what's called the mansion on the water. So our subdivision where we live is on the water, the Bogue Sound Intercoastal Waterway. And they've been down there for 3 years, had no idea who they were. But we meet them at dinner last night. So his name's Dwayne. So, we're talking to Dwayne. Well, come to find out, he's retired. He's bored. He doesn't know what he's going to do next in his life. But he's really not interested in working. He's interested in putting his money to work and getting some high rates of return. So my little flag went up. So now he's in my warm market. I just met him,
right,
but he's in my warm market. So I say to Dwayne, I said, well, Dwayne, I said, you may not know this, but I'm investing in real estate these days, and I'm actually still taking advantage of the tidal wave of foreclosures that's still going on in the market. He interrupted me. He says, oh, no, I've heard of you. I said, okay. And I said, well, wait, Dwayne, what I'm about ready to tell you, very few people know about, because the only way they find out about it is if I tell them. Now, let's put Wayne on pause for a second. What I just said to Wayne was, I'm getting ready to let you in on a secret, right?
Right.
The only way they find out is if I tell them. And I said, you see, I've got my real estate investing business opened up now to people that I've either been introduced to, because what I'm getting ready to tell you about, Dwayne, in a nutshell, is by referral only. And then I said, Dwayne, you say, I've got a program that, you say you're looking somewhere to invest your money. Maybe it's for you, maybe it's not. You see, when I said maybe it's for you, maybe it's not.
Takeaway, yeah.
Take away,
yeah.
Take away. I'm not going to try to talk you into anything, Dwayne. And I said, but listen, Dwayne, you see, here's what I'm doing now. I'm paying up to 20 times as much in returns as people can get through traditional resources. So I got his attention. I didn't say 20%.
Right.
Do you know what? Hey, we'll put him on pause for a second. You know what the average rate of return is on a certificate of deposit right now in the U.S. for 12 months?
I haven't looked, but it's not been much.
0.34%.
Well, like I said, it's not much. Yeah, exactly.
So anyway, I said, I'm paying up for 20 times. But then I said, but Dwayne, unless you answer yes to the following question, there's no need for me to give you any more information. Another takeaway. And so he leaned forward, and I said, do you have investment capital or a retirement account? that you're not happy with the rate of returns that are coming in, and you'd be interested in something that's safe and secure. And then I did something that's pretty hard for me to do, which is shut up.
Yeah.
And so I let Dwayne answer the question, and he says, well, yeah, I just told you I'm looking to do something, with this investment capital. And I said, I've got a 16-minute recording that gives a great overview of my program. And I emphasize 16 minutes. It's called Stress-Free Investing. And I said, I'll email it to you right now in an MP3. And so we're going to see, what Dwayne does with that. So that's one of my scripts that I teach my students on where to get the money out in your warm market. Now, what do you say to an existing private lender? It's a different conversation. Existing private lenders, which of course are easy to plug into in my private lender data feed, I don't tell them what my program is. By the way, the 16-minute recording that I'm sending to Dwayne by email MP3 doesn't spill the beans. All it does is arouse curiosity. It talks about private lending. It doesn't even tell the interest rate that I pay. It doesn't even tell them how they can get their money back in case of an emergency. It raises these questions. The purpose of that recording, and I've recorded that recording now, Darren, over 1,000 times for my students across the nation. I customize it for them. And so anyway, the purpose of that recording is to swell up the greed glands.
There you go.
To where they can't wait to hear the recording. Now, on existing private lenders, I just interview them. They respond to the letters that I've written, and my students use them. And I just ask them, what are they accustomed to getting? And when they say 6%, I don't argue.
Right. Well, I suppose we could do that. Yeah. Oh, that's good. That's good. So you have the conversation. What's the process? I mean, is there kind of a little education process? Kind of they learn what you're doing, and then
as a matter of fact, if you'll let me, when we get to the end of the interview, I'm going to give out as a free gift to your listeners. I've got a 16-minute recording. I've got an audio that goes over how I got my first $2 million in private money.
Okay.
And there's five steps in the warm market, and there's 5 steps in the existing private lender market on getting the money. And one of those steps, after having that initial just brief conversation and offering the audio, the next step just leads to the one-on-one. And the one-on-one is where we actually spill the beans. The one-on-one can be in person. It can be at a private lender luncheon. I teach real estate investors how to have private lender luncheons. One of my private lender luncheons that I did recently, $969,000 in new private lender money at the luncheon.
Wow.
So the next step is to spill the beans. Go over what is the interest rate that you're paying, how are they protected, how they can get their money back in case of emergency, what's the term, where you're investing. I've got all that laid out step by step. And then the final step in that 5-step process is we simply ask for a verbal pledge. I'm not asking for somebody to sign on the dotted line, because all that's going to do is tell them I don't trust them, right? So once the money is pledged, boom, we go try to find a deal ASAP.
Okay, and so essentially you're getting them in the queue, and then when you have a deal, then you contact them and say, hey, remember that what we talked about? We've got a deal. This is what it is, and lay it out. And kind of. Now, do you get real detailed on what the property is for the lender, or is it more about you got a deal? And are they recorded on title then? I mean, you do
absolutely.
that? Okay, so that's the first position kind of thing, or whatever position you're.
Well, no matter what position.
Yeah.
No matter what position they're in, they're all being secured. They're all being collateralized. What did you say right before we talked about collateralizing?
We're talking about the actual. You go out and find the deal.
Kind of deal ASAP.
Right.
But then you said something, and it was
kind of keep them in the queue.
They're in the queue, and
tell them about the deal, or yeah.
Oh yeah. How much do they want to know about the property?
Yeah.
What do they know? Hey, listen. Here's what the private lenders want to know. There's only 4 things the private lender wants to know after they're in the queue and ready to go. I call them up. The first thing they want to know is that what is the after repaired value of the property? So I tell them I've got a property. whether it's small commercial or whether it's, single family, the after repaired value is X. All right. Second thing they want to know is what is the funds that's required to fund the deal. So I tell them, okay, here's the amount of money you're going to need to wire to our closing agent. All right. Number three, they're going to want to know just the general area. Where is it located? They could care less what the street address is, but, is it over in Newport? Is it in Morehead City? Is it, what's the general area? And the fourth thing they want to know is, okay, when's the closing date so I know when to have my money, my funds wired by that date. Boom, that's it. And quite frankly, once they've done one or two deals with you, they don't even want to know all that. They just want to know, how much do you want me to send you and when do you need it?
Gotcha. Nah. Well, that's a whole lot different than the reams and reams of paper and the
Hey, look,
traditional
when
lender.
we close the deal, and as we said, all closings are taken. For me, and I recommend it to all my students, have all of your deals closed by a real estate attorney. Even if you're accustomed to using escrow companies, title companies, et cetera, closing agents, but use a real estate attorney, because using private money, quite frankly, with some closing agents, they're going, what? So I always recommend use a real estate attorney. But yeah, call them up, tell them the closing date, what the funds are. Oh, you're talking about documentation. So I don't know if we got time left or not, but there's only 5 pieces of paper.
Yeah.
As compared to a traditional mortgage. I mean, when it comes to appraisals, in the warm market, I've never even had to get an appraisal done. I'm ready to pay for it, and it would have to be an after repaired appraisal. But in the warm market, they don't. Now we use CMAs. We use comparative market analysis on that, because I want to verify exactly what is the actual current value as of today. Now, an existing private lender may require an appraisal, and I'm going to pay for it, $450. But I've got to tell the appraiser what are the repairs, so the appraiser can, do an after repaired value. Now, listen, here's the documents. It's so simple. Promissory note, deed of trust, most people call it a mortgage, insurance policy, naming the private lender as the mortgagee. They get paid first before anybody else. God forbid it burns down. And then finally, they're named on the title policy as an additional insured. Boom. That's it.
That's it, huh?
It takes, including conversation, 2 minutes.
Right.
To sign documents.
Right. Yeah. No, that's the beauty of private money that I've experienced. It's just that. It's just literally. I think I had.
You use private money yourself, right, Darren?
Oh yeah. No, I remember the first property I bought. It was with a note. I think the note only took up like a third of a page of an 8.5 by 11. It was just I will pay this much per month, beginning this for this much interest.
Right.
His name and address.
Yeah. Oh yeah.
We both
Absolutely.
signed. It was pretty amazing, especially if you're used to borrowing, through traditional markets, especially on the personal side. I think the commercial side tends to be a lot more deal oriented, which kind of speaks to like what you're talking about, which I've certainly come to appreciate. Jay, I'm looking down kind of the list of questions I had, and just kind of want to be respectful of our time. What's the single best reason you can, say to our listeners for getting involved in using private money? Just one single reason.
You're not at the mercy of being controlled by somebody else. It really helps you. You say, like today, they say, Jay, why don't you go borrow money back now from the local bank? I'll tell you a big one. And that is, there's no personal guarantees in the world of private money. You borrow money from the local bank, not only are you adhering to their rules, their time frame, that little paragraph on the last page of their note, and their note is like 20 pages long at least. You got the personal guarantees involved. So, but in answer to your question, Darren, what's really the single biggest reason to use private money? And that is, you are so much more in the control seat of determining your own destiny and when you're going to get there.
I like it. I like it. Jay, I've enjoyed our time together here. What's the best way for the listeners to get in touch with you?
Oh, thank you so much. So the best way to reach me and to also claim, I've got 2 free gifts for all the listeners just for tuning in to us, Darren. And that is www.jayconner, and let me spell that. I'm an ER, not an OR, JAYConner.com/, and this is how people know you, Darren, and your show. So /CREPN, which I'm pretty sure stands for Commercial Real Estate Network, right?
Yep. No, that's, yeah, exactly.
So the 2 free gifts, real quick, Darren, the 2 free gifts, they can download my book digitally, or we will mail it in the mail, autographed. The New Masters of Real Estate, Getting Deals Done in the New Economy. You can get a hardback sent in the mail or download it. And they can also download my audio recording, which is titled How I Raised $2,150,000 in Less Than 90 Days When Cut Off from the Banks. I go over those 5 steps in detail and how people can duplicate my system as well.
All right. Well, Jay, I thank you again for doing this, and I'm sure there'll be a lot of people checking out your book and the audio download, including myself. And again, just want to say thanks for doing this, and we'll have to do it again soon. And for our listeners, as always, I want to thank you for listening, tuning in, and until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.